Okay, everybody, here we go. It is me, Gregory Mannarino. It is Monday, May 22nd, 2023. You know something? Despite pretty much everything else, I'm in a really good mood today. And you know why? Because I'm with you. And I love that part. I love this part. Okay, people, let's talk here. What's going on? On the economic front, I want you to listen to this. No surprise to you. But I'm laughing, but I shouldn't be. So small business conditions are deteriorating. Well, what else would people expect to see here in this kind of an environment? Again, what is happening? We have central banks, the Fed, raising rates, and all they're doing is limiting the availability of credit to small businesses, trying to contract the economy faster than it already is here. So again, this is an extinction level event with regard to small businesses here in the United States and around the world to fulfill the corporate agenda. So number one, small business conditions are deteriorating, and that is very sad because small businesses used to be the backbone of the U.S. economy. No more. When you have the military-industrial complex, the agenda of central banks and the multinational corporations working together to eliminate any kind of competition. You have to understand the new system which is coming. First of all, you know the consolidation that is going on here right now with regard to the financial system, the banks here, and this also means getting rid of small businesses. So again, the corporate agenda can be fulfilled, and that is going on right now. You know, hold that thought. I have something I wrote, and I want to read a few parts to that to you. Not the whole thing, but just a few pieces of it. Anyway, going back to the economy here. So our mummified, I can't stand him, President It thing, vomitous mass, just like Powell, Bidenstein. He now says he likely has the authority to use the 14th Amendment with regard to the debt ceiling here. What is it? How is it worded here? The credit of the United States cannot be questioned or something along those lines. I don't know. I'd have to look at it. So we can see where that's going. Anyway, so we got a warning today. A warning. Oh my goodness. Morgan Stanley, I think, warns us more than anybody. So Morgan Stanley is warning of a bull trap in this market. Now here I believe, again, that they got this right here. What's going on? Are you watching the 10-year yield this morning? It's even higher. 3.68. The MMRI on the rise here. Okay, just lovely. But the market seems to be defying gravity. You know, there's a lot to this here. Maybe it's a continuation of buy the rumor. I don't know. We'll see how this plays out here moving forward. But it's an interesting thing here. 10-year yield climbing, risk in the market is climbing. Bond yields are rising around the world. What does that mean? Bonds are selling off. This is exactly what you and I have been talking about like since forever now. Waiting for the debt market time bomb to go off, and it's going to. There's no doubt about it. I was talking to Gerald Salente about this just yesterday. Now, also on the economic front, and I want to hear from you, if you happen to be a farmer, especially living in Kansas, all right? This is a headline. Kansas farmers abandoned their wheat fields because of an extreme drought. If this is true, okay, or whatever this is going on here, you can only imagine what that means for food prices moving forward. It's going to be epic. So again, if you're a farmer, especially out of Kansas or somewhere over there maybe being affected by this drought issue that they're talking about, is this true that you've abandoned your wheat fields? I want to hear from you specifically. We all want to hear from you here, and I promise I will read the comments. Now, here's something else just lovely. So Neil Cash Carey, you know, Fed president here, Lex Luthor, I like to call him, yes, because that's what he is. He's saying here, are you ready? That a Fed pause in June, which is happening, count on it, wouldn't mean that the Fed is done hiking. No, the Fed is going to continue to play this game. What are they doing? Again, This has nothing to do with inflation, but they're limiting the availability of credit to small businesses and the consumer. You've known this since almost the beginning when we started talking about it. I told you what they were doing. They were raising rates here, had nothing to do with trying to fight inflation. It's only to crush the consumer and crush the economy. So they're going to keep that pressure on, okay? You can imagine here, food inflation is going to outpace everything. You want more proof? How about this headline out of, whatever. I think this is from Reuters about Kansas farmers here abandoning their wheat fields. Energy prices, food. You can only imagine where this is going, people. It's going to be on an unprecedented scale. Now, I put this piece together here. The global debt market time bomb. You see that headline? Global debt market time bomb is close to going off. I want you to have this, okay? If you are a subscriber to my free newsletter, I'm going to put this out right after this video. I'm going to send it to you, so it will be in your inbox. There's a few things in here I don't want to read this whole thing to you, but I want to read a couple of things to you from here. For many months now, but especially as of late, we have been witnessing a phenomenon, a whipsaw action in the global bond yields, and that is a problem. The entire financial system, the economy, and the world stock markets depend on a stable bond market. I think we all know that, right? This recent whipsaw up and down gyration action in the world debt market is a clear signal that something is breaking. I think you'd have to agree with me on that. The bigger issue is that although the world is flooded with debt, listen to this, it operates in a perpetual debt deficit as the system constantly demands even more debt be pulled into the system in order to keep functioning. You know this. Central banks, to keep the debt-based system going, must inflate. You've been well-versed in that too. That is, they must create more debt. Central banks create only one product, debt. The ability of a central bank to produce debt and then issue that debt is how they stay in power. Now, there's basically 4 stages here going on leading up to the new system. Now, I want to read these stages to you. The first stage in the breakdown of the current system, which they're taking apart piece by piece, it can be seen as skyrocketing worldwide inflation and rising labor costs. This is stage 1. The second stage is also well underway, with debts and deficits hyperballooning, what central banks are currently in the process of doing in order to push off what will eventually become a complete locking up of the system and is lessening the ability of credit to small businesses, okay? I wrote this yesterday before that headline about small businesses deteriorating their conditions. But you knew this from many, many months ago. Now, although these institutions are cutting off the availability of credit to smaller institutions, they're making sure to keep it flowing to the larger institutions. I mean, but where's the outcry? Oh, it's nowhere. Keeping credit flowing to the large multinational institutions fulfills the corporate agenda of eliminating small businesses. They do not want any competition, especially when the new system is rolled out. Consolidating the banking system is stage 3. We are in stage 3 right now. And let's see, and that is well underway. In fact, the entire system itself is being consolidated. A consolidation of power and control. You've all known this since I don't know how long. Stage 4. The final stage, we're not there yet, must involve a crisis, something big enough to crater the current system only for central banks to offer a solution, their solution. An implosion of the global debt market would be that crisis, which would bring the current system to its inevitable end, only to be used as a conduit to the new system. Make sense to you? I want you to have this, like I said, please. As soon as I finish this video, like I said, I'm going to send it out to everyone in my newsletter. It may take about a half an hour for you to get it, so check later on. Please read this. It should be in your repertoire. Share this stuff as well. It's important for people to know. Now look over at the market this morning. Stock futures are slated to open higher. Trading doesn't start for exactly, 35 minutes from the time I am doing this video blog. Stock futures are higher, 10-year yield on the rise, 3.68, relative strength of the dollar lower. Gold and silver under a little pressure this morning. Same thing for cryptocurrencies, but nothing major going on. Crude oil relatively flat. People, you know this. You know what's going on, and better than all that, you know what to do about it. Again, betting against the dead, becoming your own central bank. Let them play their games with precious metals. Okay, this is real money. This is stuff that has been money for thousands of years, and no freak like Ben Bernanke can tell you that it's not real money, because central banks hold this stuff because they understand what's going on, not for tradition. You got it? All right, people, this guy here loves you a lot from the heart. I mean that. I want to hear from you. What do you think about Bidenstein talking about using the 14th Amendment for the debt ceiling? What about Morgan Stanley's bull trap warning? Neil Cash-and-Carry talking about the Federal Reserve is not done with its hiking cycle, even though they may pause in June. Small business conditions, deteriorating. Small business conditions deteriorating. Imagine my shock. Imagine your shock. And seriously, this one here. Kansas farmers, if you're out there, I want to hear from you. Is this true? Have you abandoned your wheat fields? Because if that is true, you can only imagine what that means for food inflation, people. All right. Love you a lot. We'll see you at the end of the day. That's all. 1:05 p.m. Pacific time. All right. Live.